Assalamu alaikum. Welcome to lecture 9 of AAA, and today's topic is professional appointment. This is the last topic under quality management before we move on to section D of your AAA syllabus. That is going to be planning and risk management. Okay. Now, in this we are going to focus on acceptance considerations. Before you accept an offer to audit a company, what are the things that you need to consider? Next, agreeing the terms of engagement. Once you have decided you are going to accept, what are the things? After acceptance, what do you need to do? And then the approach to the exam question. Okay. So starting with acceptance considerations. Okay. Before you accept, a firm should do a client screening. What is client screening? Client screening means an auditor cannot accept just any client. Okay. They need to take the client, okay, and see what is the level of risk of working with that client. That is known as client screening. You are going to screen out the clients, okay. That means you are not going to work for the client which you think are too risky for the auditor. You're only going to take the client who has low level of risk or acceptable level of risk. That is known as client screening. That is the first thing before you start auditing. You have to do this, okay. You have to decide for which client you are going to work and for which client you are going to decline the offer. Now, if there are reasons the firm believe that they may not be able to issue an appropriate report, you should not accept that engagement. Okay. Then, so these are the matters that you need to consider before accepting an engagement. Okay. And this considerations we are going to explain in detail one by one. First one is professional clearance. Second, independent and objectivity. The client needs to have a professional clearance. They need to have independence and objectivity. Their management should be honest. There are some preconditions for an audit that must be there. Money laundering. Client should be free from money laundering. That's why an auditor needs to do a client due diligence. Next, reputation of the client. Very important for the auditor. Resources. Do the auditor has the resources to perform the audit for your firm? Professional competence. Do the auditor has a professional competence? Fees. Are the fees acceptable? And risk. Is the risk too high or too low or reasonable? You have to see all this. Now we'll go one by one. So starting with preconditions. Okay. What are preconditions? Preconditions for an audit means according to ISA 210, okay, that is agreeing the terms of audit engagements and code of ethics and conduct. Okay. This standard gives a guidance to the professional accountant when accepting new work. Any professional accountant, whenever they have to accept a new work, they have to follow ISA 210. It's for them. And what does the standard says? According to the standard, before you accept or even planning to continue with the same firm, there are some preconditions. Okay. Precondition means there is a common understanding between the auditor and the management. And if the client imposes any kind of limitation on the scope of the auditor's work, okay, it's fine. Auditor can impose a limitation. But if that limitation is too much, that auditors have to offer a disclaimer of opinion as an audit in the auditor's report, then auditor should not accept their engagement. Okay. Disclaimer of opinion means what? When you don't have enough evidence to say or to give an opinion on the report, financial statement, then we issue this disclaimer of opinion. Okay. So in that condition, auditor should not accept the engagement unless required to do so by law. Now, what are these preconditions? Preconditions basically means management knows what's their responsibility. Okay. Number one, preparation of financial statements. Who prepares financial statement? It is always the manager's duty, not the auditors. Auditors will just come and check. Managers are the one who has to prepare financial statements according to the applicable standard. Next responsibility of the management is internal control. Internal control needs to be sound and strong. Okay, because if internal control is weak, financial statements will not give a true and a fair view. Okay. Third, you need to provide the auditor with all the available information and explanations. So these three are the conditions. These three are the responsibilities of the management. They need to prepare financial statement, they need to have a sound internal control, and they need to provide any information auditors ask for. These are the preconditions for any audit. If these three are not there, auditor cannot audit. They should not accept that engagement. Okay. Once this is fulfilled, we'll go to the other factor. Second, continuance. The same thing comes not just for the first time when you're accepting, but also if you want to continue for the second year for the same firm. You still need to go through all those factors once more again. Because in a year, things might change. Auditor might have disagreements with management, or they might have a doubt over their integrity. If this is the case, in the second year, firm has to consider resigning. Okay. Remember, when you're auditing, let's say you are planning to audit for 3 years or 2 years or 5 years, let's say, you are not going to only take this for the first time. No, all the 5 years you have to do this. You have to go through those factor. You have to revisit those acceptance considerations before you accept. What are the considerations? You have to always go through that list every year. Okay. Now, professional clearance. Okay. Professional clearance means your existing accountant says that this firm is okay. They are giving that professional clearance for the firm that you are planning to audit. So in that case, you must contact the existing accountant. The prospective firm must contact the existing accountant to get that professional clearance. Okay. Now, what should the prospective firm do? They should ask the client for the permission to contact the existing auditor. If you are let's say you are a new auditor, you should ask permission from your client to contact with the existing auditor. Okay. Because based on that auditor's explanation, you might decide whether you have to refuse or accept the client. Second, contact the outgoing firm. Okay, and ask all the relevant information. For example, were the fees overdue, whether they were paid their fees on time, whether there were disagreements with management, whether there were any breaches of laws and regulations. Okay. Now, if a reply is not received, what should you do? The prospective firm should try to contact through other means, let's say by telephone. If the reply is still not received, okay, still the prospective firm can continue to accept, but they should proceed with care. If if a reply is received, okay, you have to see what kind of response did you get, and then you have to assess if there are any ethical or professional reasons why you should not accept that appointment. You have to see. The existing firm must ask the client for permission to respond to the prospective firm. Okay. And if the client refuses the permission, the existing firm should notify this to the prospective firm. Okay. Now, independence and objectivity. So, if the assurance provider is aware before they have accepted the engagement, okay, that there are threats to objectivity and there are no safeguard to manage it to an acceptable level, engagement should not be accepted. Okay. Management integrity. If firm as a reason to believe that the client lacks integrity, they should not accept the engagement. Why? Because if there is no management integrity, there's a greater risk of fraud and intimidation in that company. Okay, even your audit opinion that you have formed will not be true and fair, will not give a true and a fair view. Money laundering. Before you accept, you have to do a client due diligence. Okay, and if you are suspecting that your client is involved with money laundering, or actually money laundering is happening, you should not accept that engagement. Resources. You should also see the resources that you have before you perform the work. For example, if you have insufficient time to complete the audit, okay, quality of the work will be affected. Okay, that's why you have to see the resources. Risk. Okay, risk could be, let's say, that your client, they have a record of poor performance, their control is poor, they are involved in some unusual transactions. Okay, this also you have to see whether their control is sound, whether their performance is good, whether they are not involved in too much unusual transaction. If it is so, it increases the risk. Okay, risk of issuing an inappropriate report. So if the risk is too high, safe side is do not accept that engagement. Professional competence needs to be checked. Whether you have their professional, whether you are professionally competent enough, okay, to perform the audit for the firm, for your client. Okay, fees. Your fees, okay, should be a compensation for the level of risk that you are taking. That means higher the risk, higher the fee. Okay, and also you have to check the credit worthiness of your prospective client. Okay, whether they are giving the payment, whether they are paying the fees on time or not, or they are delaying the payment. Okay, because all this create a self-interest threat for the auditor. Then reputation of the client, very important for the auditor, because once you're involved with a firm, with your client whose reputation is not so good, it will harm your reputation as well. That's why you need to check all this. And then finally, the additional professional work. Sometimes you need to perform this additional professional work. Okay, they might be complementary to the work that you're already doing. So before you accept any work, any such work, you have to communicate this with the existing auditor. And if the permission is not given to communicate this to the existing accountant, engagement should be declined. So now that you know all the acceptance consideration, let's do a question. Test your understanding too. This question is for 6 marks. That means you need to give 6 points. But if you check the answer, the answers will always be more detailed because they will give all the possible answers. So they have given you 7 points in your answer. Okay, let's see what the requirement is. Explain the matters to be considered in deciding whether to accept the appointment. Okay, matters to be considered. Just now we went through that list. Out of that list, any 6 points. Okay, so here your firm has been approached to provide annual external audit following the resignation of the previous auditor. This is a fact. The previous auditor has resigned. Why? Because you need to question why the previous auditor resigned. Now, the company's year end is 31st December, and this is the same as the majority of your firm's other audit clients also. Everyone is 31st December. For your other audit clients also is the same year, majority of them. So their supply goes to major retailers. Your firm does not audit any other retailers. You see, only retailer is this company. So it's new for them. They're not in that industry. The company is currently recruiting a new finance director. Currently, a new finance director. That means they have been without a finance director currently. Okay. After the previous finance director was found guilty. Previous finance director was found guilty of bribing customers in order to win major contracts. This is an easy question. Okay, why? Because it's a knowledge based question. You have those points, you have those lists, just gives any 6 points that you can explain and link with the case study. Okay, first point. So first one is, let's say, resignation of the previous auditor. This could be the first point that you can include in the matters to be considered. So we'll write one by one. Okay. Reasons, always use a subheading and then explain the points. Okay, you have to write it in paragraph with subheadings. Reasons for previous auditor resigning. Okay, just writing a point is not enough. You need to explain, read the verb. It says explain, not identify. So under this, what can you write? Why this is a matter to be considered? See, if the reasons are like difficulties, okay, I mean, if the earlier auditor has resigned due to difficulties during the audit, the pattern will be repeated for you as well. Okay, same pattern could be repeated. That's the reason. Okay, so you can write under the points. The answers are there. You can read the answer. I'm not going to write the whole answer. You can read it. I'm just writing the points and explaining you. Okay. So the reason is that if the previous auditor resigned due to difficulties encountered during audit, same issue could come up again when a new auditor comes. That's why. What could be the second? Resources. Resources. Which resource? You see, year end is 31st December for major client. That means you don't have enough time. Okay. Your deadline is going to be the same almost for any client. Okay. That means all your audit stuff, you will not have sufficient audit staff available to assign to the audit. So because of this limited resources, what happens? You are rushing. You'll be rushing so that you can finish your work. And rushing means it affects your quality. Quality gets affected. Quality of the audit. Third, competence. Competence. You see, oldie, uh, sorry, uh, your firm does not audit any other retailers. So if you see the competence, you don't have experience in the retail industry. Okay, because they don't have experience, you will not understand the industry's laws and regulations. It makes you more difficult to audit. Okay, it increases the audit risk as well. Fourth, absence of a finance director. Finance director has been absent. See, these are more specific points. Okay, these were not there in that list. This is how you need to try to give more specific to the case study rather than giving general points. Okay, resources, competence, these two are general from the list you have given, but this one and this one are more specific to the case study. Okay, to the question given. Absence of a finance director. Okay, why? When any financial statements are prepared without a finance director, lot of the misstatements, material misstatements would not be seen. Okay, they might be overlooked, they will go undetected. So this means it's more difficult to get an audit evidence to say that there's a material misstatement. And also financial statements might not be prepared on time also without a finance director. Okay, so if it is not prepared on time, what happens? For the auditors, it becomes difficult to get audit evidence. Okay, again, you'll be rushing to get the work finished. Fifth, bribery. You see, there's a bribery that is taking place. Previous finance director left because they were found guilty of the bribery. So this indicates a high control risk. If bribery is there in your system, you cannot rely on your control system. Okay, and also this may cast doubt over the integrity of the management. That's another issue. That's why bribery is an issue to be considered here. Doubt over integrity of management. So in this condition, this could be too risky. Okay, for you it could be too risky to accept this engagement. Sixth, independence. Okay, you have to consider independence. That means you, the firm, needs to consider independence from your client. Okay, there could be ethical threats, for example, threats to self-interest and familiarity. Okay, and if safeguards are not there, you should not accept that engagement. Then is fees, the last one. I mean, obviously you can write this answer in any order. The points doesn't matter. You have to see the level of fees. Okay, and you have to see whether the fees is going with the amount of work that you are doing regarding the risk that you are taking. So now we are moving on to agreeing the terms of engagement. Once you have accepted the engagement, next stage is the engagement letter. And what needs to be there in this engagement letter are the purpose, the content, and changes in the letter. Let's go through the purpose first. So the purpose of this engagement letter, why do we need this? So that, okay, the conflict, the misunderstanding between the firm and the client reduces. That's the main purpose. Okay. Next, it confirms that you have accepted the engagement. Third purpose, terms and conditions of the engagement are set out. You need to remember this purpose, by the way. One, it minimizes the risk of misunderstanding between the two parties. Confirm that you've accepted, and terms and conditions are set out. Now we are moving on to the content of this letter. Okay. So the content is, remember the terms are recorded in a written audit engagement letter. It's written. Okay. So these are the things: objective and scope of the audit, responsibilities of the auditor, responsibilities of the management, identification of the applicable financial reporting framework that you have used to prepare the financial statements, and what is the form and what would be the content of the report that will be issued by the auditor. So these are the 5 points that will be there in that engagement letter. It's the content. Okay. Now, engagement letter content in detail. So in this, you will be having the applicable regulations, legislations, and ISAs, and also any ethical standards that you have applied by will be there in that letter. Second, any form of other communication as a result of the engagement, limitations of the audit procedures, arrangements regarding planning and performance of the audit, expectation that management will give written representations, then agreement of the management. Okay, managers have agreed that they are going to give and provide auditor with a draft financial statements and also any information that they require in time. Why? So that auditor could complete the audit on time. And the basis upon which fees has been calculated. Now we have some more. Okay, also the management's agreement that any information from the date of the auditor's report till the date financial statements are issued. Okay, Any information that comes into the notice of management, they are going to give it to the auditor. They are going to make it available to the auditor. Okay. Request of the management, okay, that they have accepted, they have acknowledged the engagement letter, and they have agreed with the terms of engagement. Arrangements regarding experts, okay, if you are using experts from other industries, that also will be there in that letter if you have used so. Okay. Arrangements regarding internal auditors, if you are taking the help of internal auditors, that also needs to be there in that engagement letter. Any restrictions to the auditor's liability needs to be there in that letter. And any obligations to provide audit working papers to the other parties will be there in that letter. Now changes to the engagement letter. Sometimes engagement letter could be changed, not all the time. And remember one thing, this engagement letter is reviewed every year. Okay, you are in that, you are auditing for a firm, let's say for 5 years. Every 5 year engagement letter will be reviewed. Why? So that it's up to date. Okay, but remember, you are not reissuing every year the letter. Letter will be one only, but every year you have to review whether there are any changes to the standard. Okay, whether there are any changes to certain things. If there are certain changes, then you have to reissue a new engagement letter. Why do you think changes could occur? Number one, if the statutory duties have changed due to new legislation. If professional duties are changed, for example, new standard came up or the existing is updated. Any reason changes in senior management, any significant change in the ownership. If these four things are there, a new engagement letter is reissued. Okay. If none of this are there, you don't have to reissue. Okay. You can use the same engagement letter till you complete the audit. Now, audit of component of a group. Okay. This is especially relevant if a parent has subsidiaries, okay, or division of a group, it's for them. Okay. So when you are an auditor of the parent company as well as the subsidiary, in that report, in that letter, you need to write whether you are auditing just for the parent, okay. If you are, let's say, auditing for, let's say there are 6 subsidiaries. If you are auditing for all the 6 subsidiaries, okay, the audit firm needs to decide whether they are going to issue a single letter that covers the entire group or separate letters for each subsidiaries. Subsidiaries means each component of that group. We call component. For the subsidiary or division, we call they are component of a group. You can issue one single letter which says that it covers all the component, that means all the subsidiaries, or you could give them separate letter each. Okay, that means engagement letter, single engagement letter covering all the component, or separate engagement letter for each component. If the audit firm sends one letter, if they decide that you are going to give one letter relating to the group as a whole, then in that letter you should identify, okay, who are the component, who are the auditor, and for which audit subsidiaries you are auditing. You are appointed as an auditor. Let's say there are 5. You might be appointed for 2 of the subsidiaries an auditor. You have to list them in that letter, that these are the component 1, 2, 3, 4. Okay. Now, the third, after acceptance, engagement letter is done. First, you have considered the issues before accepting. Then you have accepted, engagement letter. Now, after acceptance, okay, let's say new firm. For a new firm, okay, when an accountant is been appointed, they should confirm these things. Number 1, that outgoing auditor has vacated office in a correct manner, and the incoming auditor has been properly appointed in accordance with relevant local legislation. And most of the time this is done through AGM, annual general meeting, where they have achieved the highest voting. Okay, and they should be documented in a formal meeting also. that a new auditor has been appointed. Document has to be kept. Now, it should not be verbally. It has to be written. Next, outgoing firm. When an outgoing firm, okay, that means the previous auditor leaves, they have to transfer information to the new auditor. Okay, so this happens. They are seized from holding office. They should return all books and papers to the former client, except if they are keeping anything for their security purpose. Let's say their fees has been unpaid, so for that they want to keep some security, then they can keep that under their possession until their fees are paid. Okay, so once you know that when a firm goes and a new firm comes, okay, there is some issue during first few weeks. Okay, from a new old auditor to a new auditor, okay, it becomes a little difficult to continue. Okay, because there are some changes and everything. New auditor will not know how the old auditor used to operate, and the paper, the file, the set of financial statements. That's why, in order to continue the treatment, okay, so that the works keep continuing and there is no full stop, the outgoing firm should give the new accountant all the reasonable transfer information. That means when a new firm comes, they should not do everything from the scratch. Okay, they'll be transferred with all the relevant information from the old firm, the outgoing firm. That is the last set of approved accounts, the detailed trial balance. Okay, this should be given to the new accountant by the outgoing firm, free of charge. Anything beyond that, anything additional information, okay, it is totally at the discretion of the former accountant. That means it is the choice of the former accountant. He decides. Okay, and when he decides to give any additional information beyond the reasonable transfer information, he can charge a fee for it. Okay, but for reasonable transfer information like detailed trial balance, last set of approved accounts, these are free of charge. Anything beyond this, you can charge. Okay, now finally, approach to exam questions. So we have finished the three things. Before accepting consideration, okay, once you have accepted the engagement letter, and after acceptance, what should you do? Now finally, when this question comes in your exam, how you approach. So you need to ask, you may be asked the following in your exam. Number one, matters that needs to be included in the tender proposal. Matters to consider before accepting the engagement. Matters to include in the engagement letter. Tender proposal and engagement letter are not the same thing. Tender proposal is before accepting the client. Engagement letter is after you accept the client. Now, matters to include in the tender proposal. First stage is tender proposal. These things. Okay. What is the purpose of tendering? Okay, the purpose of tendering is to sell the firm services to the client. Basically, you want to sell your service to your client. You want to audit for your client. That is your purpose, right? See, take this tender proposal as a sale pitch to your client. You're selling to your client. It's like that. Okay. So that's why in your tender proposal, give all the positive points. Okay. And you should know that whether you are competent enough or not. If you think you're competent enough, then only go for the tender proposal. Okay, you don't want your firm to decide for you whether they think you're competent to perform the work or not. Okay, if you don't have the sufficient competence, don't go for the tender proposal. Okay, now matters to consider before you accept an engagement. So this requirement could be set in the context of audit and a non-audit engagement. For both, principles are same whether it's an audit or a non-audit engagement. Okay, for any work, let's say any work you want to decide, you need to go through the same thing, right? How risky it would be, whether they are independent or not, like that. Then firms should consider reasons why they should not accept the work. Let's say management has a lack of integrity. You cannot accept the work in that condition. And reasons why they cannot accept the work. There are two things. One, you should not accept the work. The other thing is you cannot accept the work. Let's say you're not competent enough to You don't have the experience of the industry. Previously, we have just done a question on that, right? Retail industry. Now, this is a consideration for the accountancy firm. Only the conclusion of the decision is communicated with the prospective client. You don't have to give them all the details. You just give your final decision whether you have accepted the engagement or not. Finally, engagement letter. In the engagement letter, okay, all the terms and conditions are clarified. Okay. See, once you have not accepted the engagement letter will not come. Automatically, it will not come. If you have accepted the engagement, only comes engagement letter. Because everything is written. Nothing is verbal here. Here, why engagement letter? So that in future, any misunderstandings are minimized between the client and the audit firm. Okay. Some points firms can include so that misunderstandings are not there. For example, who can rely on the report? Responsibilities of both the parties, that means the management and the auditor, how the fee is calculated, and when is the deadline of the audit. Okay. So now, let's summarize everything that we have discussed so far in this lecture. Okay. Acceptance. Okay. From the point of acceptance. So before accepting, these are the matters. Independence, whether firm is independent or not, the client, I mean. Whether client is competent, whether the firm is competent enough or not, whether the firm has the resources, okay, the time, the audit staff to perform the audit, whether the management is lacks integrity or not. If they lack integrity, you should not accept the engagement. Professional clearance, you have to get this from the existing accountant. And preconditions. Preconditions means auditor has to, the management has to prepare the financial statements. They should have a sound internal control. Okay, things like that. Now, engagement letter. After accepting comes engagement letter. Objective and scope. Basis of fees. Responsibilities. Financial reporting framework. Form and content of the report. And it confirms that you've accepted the offer. So now, let's do a final question before we conclude this lecture. Test your understanding 3. Okay. So you have 3 parts to this, and the requirement is worth 15 marks. Wow. So you need to comment on the suitability of each of the above proposal in terms of the ethical and professional issues that they raise. Remember, in your AAA, you are going to definitely get a question on ethics. No doubt about it. Now, starting with first, okay? So, but let us read a little background first. You are a training manager in Hawk Associate, which is a firm of chartered certified accountant. A firm has suffered a reduction in fee income due to increasing restrictions on the provision of non-audit services to audit clients. Because you have faced a reduction, what happened? The following proposals are for obtaining professional work are to be discussed at the forthcoming in-house seminar. Okay, part A, cold calling. Cold calling means you are approaching someone directly to get new business from them. They are not you have never done business with them. Okay, you can say they are your new customer, prospective customer. Okay, the chief executive officer of local businesses and offering them free second opinion worth 5 marks. First, let's finish A, because A, B, and C, they are not linked together. Okay, they are separate issues. I've already copy pasted the answer for you. Okay, you need to give 5 points. But before you start, understand that there are 3 issues that you are addressing here, not just one. It's not just cold calling. One is cold calling, one is free, and the other one is second opinion. Okay, it's likely to earn more marks than just focusing on one. Okay. Okay. So here, cold calling. Okay, you need to understand the nature of call calling, by the way. Okay, call calling is prohibited in certain countries. That's why direct approach may not be suitable. So you have to say talk comment on the suitability. So you have to basically say whether something is suitable or not suitable based on ethical and professional from ethical and professional perspective. So this is not suitable. But where cold calling is allowed, only some countries, yes, is prohibited. But what if it's not prohibited? Okay, where it is allowed, it may still only be permitted for existing business, not for a new business. Like you want to offer them some additional service, then you can do cold calling to them. But it should be your existing business, wherever cold calling is allowed, whichever country it is allowed. Okay, so the direct approach to the non-business client may still be prohibited. You see? Now, talking about the ethical perspective. See, this is from the professional this thing. Okay, about cold calling. They told professional and ethical. You have to deal with this two separately. Okay. So coming to the fundamental ethical principles, okay, you have to adhere to this. Okay. Whilst it says solicitation, it has to be decent, it has to be honest, it has to be truthful. Can be acceptable. But cold calling which amounts to harassment is not. Okay. Next. So we are over with cold calling. What are the other two issues? Free and second opinion. Let's start with free. Offering a service for free is not prohibited, provided that the client is not misled about the future level of fees. You should not mislead your client regarding future level of fees. Okay? It is not prohibited. See, wherever it's not suitable, you are getting more marks for it. Understand? Cold calling is not suitable. Okay? Wherever it is not suitable, you will get 2 marks. Wherever it is suitable, like this free service, you will just get 1 mark because not much to explain. Wherever it is not suitable, you have to give both ethical and professional issues. From that point, you have to talk. So here, for cold calling, you will get 2 marks. Here, you will get 1 mark. And the third, second opinion, will give you another 2 marks. So 2 plus 2, 1. That's how you are getting the 5 marks. Okay. Let's go to the third, that is second opinion. Remember, regarding second opinion, there are strict ethical codes. Okay. What does it say? It says that practitioners are not advised to provide second opinion when requested without following a procedure of contacting the incompetent auditor or accountant, whoever is the main auditor or accountant who is looking after the financial statement. If you give second opinion, you need to contact that auditor, whoever is auditing. You just cannot give second opinion without contacting the incumbent auditor. They are very strict on this. Okay. And this is a tutorial note. See, tutorial note does not come in your answer in your exam. This is just for your learning purpose. Okay. So that in future when you're learning, it helps you. Okay. Second opinion can only be given when permission to speak to the original auditor is there. Okay. But you can only ascertain the information that was made available to them of the time of the report. Anything after this period, any information is made available, you should not consider that. Okay. The second auditor should not consider any information that become available subsequently later on. That is the job of the main auditor. Okay. Now coming to B. This is about advertising. B is about advertisement. Okay. So they are placing an advertisement in the National Accountancy magazine. Okay. This is for 6 marks. That means 6 points. Let's see what it talks. It's about tax planning, by the way. The main issue is tax here. Tax saving, tax planning, whatever. Okay. So if you have an asset on which a large chargeable gain is expected to arise when you dispose, you should be interested in the best tax planning advice. However your gains might arise, there are techniques you can apply. How associates can ensure that you consider all the alternative FAT presentation so that you minimize the amount of tax. No tax saving, no fee. When you're answering this question, what I want you to look through is it's just not one thing. It's not just about tax planning. There are so many things, and part by part you have to talk about. One is tax planning. The other one is techniques. The other one is minimize the tax. The other one is no tax saving, no fee. Fourth. So there are many issues to talk about it. Each line you have to pick separately and talk about it. That's how you're going to get the 6 marks. It's more important for you to know how to collect the marks. Then AAA becomes very easy, trust me. Even though AAA looks very difficult, but AAA is one of the easiest paper if you know the right techniques to score marks. Trust me on this. Because there's a lot to write on this. And the papers where you have a lot to write about, it's easy to score marks rather than those papers which are very restricted where you cannot write much. Okay. So now, if you see the answer, they've given 7 points. You see, regarding tax planning. So this is the main topic, tax, and they have given it in bullet points. But when you are writing, you have to write it in paragraphs. Maybe you can just keep this as subheading and then just don't add the bullet points. Just write it in paragraphs. That's enough. So 1, 2, 3, 4, 5, 6 and 7, because I always tell you answers that has been published are they give all the possible answers. They don't see the marks. So even if they ask for a 5 marks, they will give you 10 points. It's like that. Maximum possible answers so that you can just pick any from it and learn. Okay. But anyway, the max is for you to write 6 points. Okay. When you start first, talk about advertising first, because the main issue is advertising. What it talks about advertising. Advertising part I've covered in the previous lecture. Lecture 8. Okay. If you want to know the rules of advertising, you have to watch my lecture 8. It's there in the playlist under AAA lecture. You will get it. Okay. My first 8 lectures are there. With this, there will be 9 lectures. Okay. And if you want to see the chapter in your textbook, it's chapter 6, practice management. Already the name is there. Okay. Now, advertising. So advertising, okay, is generally an allowed subject. That means you are allowed to advertise. But you have to see whether it is complying with ethical rules or not. Okay. So that itself gives you first point. That's not a point under tax planning. It talks about advertising. Because this is advertising. What are you doing? You're basically advertising your tax services. That you're going to minimize the tax, you're going to do tax planning, you are going to say no tax, no payment, like that. Second, where advertising is permitted. Some areas you cannot advertise, but here it's permitted. Minimum requirements. You have to list the minimum requirements. What is it? The advertisement should be decent, it should be honest, it should be truthful. If this criteria may not, okay, this criteria may not be met in this proposal. So you have to link this with the case study. Generally, advertising is permitted. But are they decent? Are they honest? Are they truthful in this scenario? No. Why? Because you will explain in the other following points. So one by one. You see how they are explaining? See, look at the first line of each paragraph. The best tax planning advice. Next, can ensure. They can ensure. The next one is difference between tax avoidance and tax evasion. See, whenever tax planning comes, mention always these 2 terms. Okay? It's a hint I'm giving you. Whenever they talk about tax advertising or tax saving or tax minimization, talk about these 2 terms, tax avoidance and tax evasion. We'll go it in detail in little later. Okay. Next, the minimization of tax, and the last one, no tax saving, no fee. So one line they are taking, or one phrase from that sentence they are taking and explaining each point. Now you got a structure of the answer. Now we'll go to the answer, starting with best tax planning advice. Can you advertise like this, that you are the best tax planning advice? You are a company who gives the best tax planning advice. Can you advertise like that without any fact? Did you provide any fact? No. So this is a self laudatory statement, and it is not based on verifiable facts that you are a best tax planning advice you give. No. So you are basically giving them high hopes. You are not justifying the claim, unjustifiable claim based on your expertise in the field of tax. And if you see my lecture 8, see, for this question you need to see my lecture 8. Lecture 8 and lecture 9 are very connected. They come under the same topic, practice management. That's why first you need to watch my lecture 8 before you come to my this lecture. I advise you. Okay. So in my lecture 8, I have told you, okay, that you cannot advertise by comparing yourself with other professional accountants. Okay. You cannot be superior making them inferior. And you are doing exactly by saying you are the best tax planning advice, saying that others are not. So this is an unjustifiable comparison with other professional accountants in the public practice. You cannot do that according to advertising rules. Next, can ensure. What did they say? Again, we'll go back. You can always revisit. It's a good thing. You see, they said they can ensure that you can consider all this thing. Alternative fact presentation. So this is an assertion that you are giving and may not be a supportable claim. Therefore, in this case, the advertisement is not honest. Next, talk about tax evasion and tax avoidance and evasion. There's a fine line. They are not the same. Why am I talking about this too? Because you told you can apply techniques. Okay, and alternative fact presentation. Just because they talked about techniques, they talked about alternative fact presentation, it is leaning more towards the latter. That means it's leaning more towards tax evasion. See, tax avoidance is legal. This is illegal. This is the difference. Tax evasion is illegal, and it's leaning more towards the illegal one, tax evasion. So that means it's not even ethical also. Okay, so not be in keeping with the integrity of the profession. It is not. If it's tax evasion, you are not being integral. That means you are not being honest. Next, minimization of the tax. See, you are making an assertion that you can minimize the tax. This can expose the company to litigation. Court case might be filed against you. Because of this is very risky. This engagement could be very risky. Okay. And you are expecting that you will save tax by saying there's a lower tax liability. This is unjustifiable. Okay. Or created deceptively. Next, no tax saving, no fee. See, you cannot accept this kind of client which says no tax saving, no fee. Why? It does not compensate for the risk. Remember, the fee that you are taking should compensate for the risk that you are taking. Okay? Because this is more like a contingency fee. And in my previous lecture, under advertisement, contingency fee is prohibited. Contingency fee means you are not accepting a fee unless certain outcome is achieved. This is a contingency. Based on some conditions, you are going to get that fee. This is prohibited. For an auditor, you cannot go by contingency fee. It is only acceptable for insolvency, when you have to turn an insolvent country to a solvent company. There you can say. Now, third is regarding, looking at the answer, I can say it's about business card. Let's see. It's worth 4 marks. Okay. So displaying business card alongside those of local tradesmen and service providers in supermarket and library. Let's read the card. This is the card. It says Hawk ACCA Associate for professional accountancy, audit, business consultancy, taxation service, competitive rates, and money back guarantee. Okay. So here, let's talk about business card. This is also in my previous lecture. In fact, this whole question you will get from my previous lecture. My previous lecture will help you to answer this. So it says about business card. Okay. This is a form of stationery. Understand this. Okay. So even for stationery, okay, it should be of an acceptable professional standard, and it should comply with legal as well as member body requirements. Okay, stationery also. It should include these things: the name of the partner, the principles, and the professional description. This is based on your knowledge from my lecture. First you apply the knowledge, then you apply to the case study. That's how you answer. Okay. Now, you are advertising this business card, right? So in that advertisement, what should be there? Name, contact details. Regarding name and contact detail, in this respect, it is suitable. Remember the requirement, you have to comment on the suitability. Yes, name and contact details are there. We'll see. You see the name, Hawk ACC Associate. However, the danger of giving a misleading impression is pronounced when there's such a limited space for information. Now, the other 3 points. Okay. The tone of the advertisement may bring discredit to the ACCA's name. It is unsuitable in this case. Okay. It is unsuitable if you are taking an unfair advantage of under ACCA's name. Okay. But you can use ACCA's mark. Okay. Hawk Associate can use this on their letterhead and stationery, the ACCA mark. But you cannot use it in any way which confuses it with the firm. Now, you are emphasizing that you are giving professional accounting, tax service, and all those things, right? So the emphasis on this word may be unsuitable. Why? As it suggests that other firms are not professional. It means other firms are not professional by saying you are giving professional those things. Next, regarding money back. Remember at the end there's a money back guarantee. So it's unlikely that any professional would offer money back. We don't do that, right? In the event of a dispute over fees, okay, remember, if a dispute happens, because you are saying money back, let's say there's a dispute regarding fee, this matter might be taken to the court, or it might be complained with their member body. For example, if you're an ACCA member, they will file this case against you to the ACCA board. Okay, that's a problem if you put this money back offer there. Okay, remember they talked about trade person. A trade person can guarantee the quality of their work if the customers are not satisfied. Correct? But can auditor guarantee that? Can auditor guarantee? No. An auditor cannot guarantee a particular outcome for the work that they have undertaken. Yes, they have audited. They can give reasonable assurance, but they cannot put 100% guarantee for the outcome. An auditor cannot do that. For example, they cannot say this will be a reported profit. They cannot say this will be a tax payable. With guarantee, no auditor can tell this. No matter however experienced you are, an auditor can never guarantee the truth and the fairness of the financial statement when they are giving the opinion. There's a risk involved always, unlike a tradesperson. Now, Second question, test your understanding. 4. This is little easier. It's only for 4 marks. Basically here you just have to identify possible safeguard for AB regarding accepting the appointment. Let's read about this company a bit. You need to know the background of the company. Okay. So AB accountant has been invited to become the auditor of this company XY, company with poor reputation. Okay. Senior managers are recently convicted of corruption. The company insists that they are going to change their culture, and now they want the AB accountant to join them. So basically you have to talk about the safeguard. Why? Because they have a poor reputation, corruption is there. So let's see. You have to do a little bit creative thinking also. Okay, you need to think a little bit also. Sometimes everything you might not get directly from your textbook. Okay, what could be the safeguard? You have to think. One is due diligence. See, before you accept an appointment, weigh the pros and the cons. Okay, if the pros are more, you accept. If the cons are more, you do not accept. First is perform client due diligence. Second, obtain a detailed knowledge of the client before you accept them. Why? Because they're involved in corruption and all. That's why you have to do this. Third safeguard is you have to secure the client's commitment that they are going to implement strong internal control. And also highest standard of corporate governance. You need to have a word from your client that they are going to commit to the strong internal control as well as highest standard of corporate governance. Then allocate senior partner rather than junior to be the engagement partner. Why? See, whenever you are involved in a firm, okay, with a client which has a higher risk or who are involved in money laundering or you are suspecting them, it's better to involve the senior partner. Why? Because they are more experienced. It will be more risky if you take a new auditor or a junior partner there. You need high level of experience in those because they are very critical. They involve high level of work, intensive work to be done, which cannot be done by junior partner with low experience. That's why. Then you can perform an engagement quality review. Okay. But even after safeguard, you cannot reduce the threat to an acceptable level, then decline the appointment. Firm should decline the appointment. Remember, the reason why safeguard is there is to reduce the risk to an acceptable level. If after the safeguard also you cannot do that, don't accept the offer. That's it. So thank you for watching, and I shall see you in the next lecture, lecture 10. But lecture 10 will be on the new section of your AAA syllabus, that is section D, that is audit planning. So from quality management, we are moving on to audit planning. Okay. And that is the major part of your AAA syllabus also. Why? Because you are definitely going to get that in your section A of your AAA. Right? So thank you and take care and see you.